Let's get some more now with Pete McGuire, CEO of XM Group. Pete, great to have you with us this morning. Thank you for joining us. Certainly when it comes to the outlook for the session today, we've seen moves higher in iron ore, in oil, in copper, all looking very, very supportive. Let's just start with oil for the moment. How are you playing this right now?
Well, good morning, and I tell you, it was just an amazing night. You know, from around about 1 o'clock onwards our time, nearly up 5%. No doubt the hedge funds are stacking positions. Those talks as far as OPEC and the non-OPEC producers in St. Petersburg over the last couple of days, I think the market was certainly oversold and it's rallied very strongly to the upside. Brent up, WTI up, WTI I think 4.8%. So, yeah, a very, very strong night for traders, and looks like there's a little bit of momentum behind it.
Pete, just bringing in my guest host for a moment, Brian Parker of Sun Super. Brian, we do seem to have oil optimists back, as it were, but they're still not quite buying into that rally just yet.
Yeah, and I think they're right to be a bit sceptical. Not just I think there's two sources of scepticism for me. And look, put it on the table. I think oil does clearly have a bit of momentum here, so it could clearly go a bit higher in the short term. But one is the ability of OPEC to actually stick to any kind of agreement. It pays to be cynical there over time. And secondly, yes, it's all very well what OPEC may decide, but unless you actually get the US producers in on the deal, it may not last long, because what we've seen over the last few years is just how quickly US oil producers can actually turn taps on and off in response to movements in the oil price. It's a matter of weeks, not months. So, you know, if we do see a further push up in the oil price, I think you'll see, you know, data from the Baker Hughes oil rig counts numbers start to increase again, and the potential for US producers, I think, to put a cap on the oil price sooner than some people expect, I think is very real.
Just with that in mind, Pete, coming to you, I mean, what are some of the pricing forecasts that you're looking to over perhaps the medium to longer term period when it does come to crude oil?
Well, working on Brian's assumptions there and discussions, I agree with him 100%. The most important thing is price flexibility. At $40 a barrel, the shale producers all shut up shop. But at 45 to 48 to 49, they rally forward. The chairman of Halliburton was saying in the last 24 hours he believes that the rig count could top 1,000 by the end of the year. So I think it'll probably oscillate between that 46 to 52. Let's take on board where the US dollar trades over the next couple of months. And of course, this summer driving season in the US and Europe is traditionally most consumption for gasoline. So I think that the volatility will remain. Hard one to put a price on whereabouts, but I think it'll be in that price range, 46 to 52.
So who are you looking to? I mean, we're in the midst of production season at the moment. Talk us through some of the corporates that you're looking to yourself. Where are your stock picks right now?
Certainly looking at the Caterpillars, looking at what happened overnight. I mean, all of those particular large Dow 30s, we're expecting relatively good numbers moving forward, beating expectations. And that's what it's all about. You know, the realisation, and I think when we looked at yesterday, I think there was about 64 companies in Australia that had actually, as far as forecasted numbers, 3/4 of those had been to the negative. Whereas in the US, I think it could be a little bit around the other way. So in turn, that will no doubt push the S&P further forward, and the Dow, of course. So those big, you know, Dow 30, the financials, the industrials, the Apples, all of those technology-focused companies, I'm keeping a very close eye on, and where the S&P trades.
On that note, Pete McGuire, we will have to leave it there. Great to have you with us this morning. Thank you.